Welcome, New Rand shareholders. Today is Saturday, September 11th, 2021. Today we have Jim Bailey, CFO of New Rand Wireless, with us. Hello, Jim.
Frank, good to see you again.
Good to see you. In fact, I'll see you in person tomorrow in Toronto. Looking forward to that. And myself, Frank Candido, Investor Relations at New Rand Wireless, Inc. So, Jim, our shareholders have asked us a lot of questions, and we get emails, I get text messages, we get all kinds of questions, etc. But why don't we focus today on financing? I think that's really a lot of the questions are around that. But before we do that, I just want to congratulate you on your new contract at New Rand. Glad that you're planning on sticking around for a while. But maybe you want to comment a bit on that contract to our shareholders.
Well, sure, Frank, and thanks for that. It was important for me, and I'm very pleased to be now an official member. And I think what I'd like to talk about today with the financing, I think really give a sense of how excited I am in what the future holds for New Rand. Even before I started as CFO, I was doing work and I saw the tremendous potential. I think we've got the technology, operating capabilities, and the access to finance that we can achieve great things. So, there is a big equity component to the package, and I think it's a good thing. I've had some positive responses from shareholders and really saying, look, it aligns you with us, but it does a couple of things during having that equity stake. One is that Francis and I really have a meaningful stake in the business, and I think we needed that in order to help drive the direction and really have a say when it comes to the vote and so on. But also what it does is it means that if I'm successful, the shareholders are successful and the company is successful. And it means that our objectives are very much aligned, and so I hope to achieve a win-win situation for our shareholders and for me. And I'm confident that we can do that.
Excellent. Thank you for that, Jim. Why don't we get right down to the nitty-gritty then, financing. Everyone's asking, where are we at? Maybe you can comment on that in sort of a general sense. Maybe starting with Cameroon, if you like, or go in the direction you want.
Yeah, well, let's talk a bit about Cameroon, because that's the closest to where we are. And we've been working very hard on getting financing arranged for, what is really an ambitious build-out program with the network as a service model. And I think we've talked about it previously, but essentially to get the Cameroon project for 122 sites is a total build cost of about $4 million, which in the grand scheme of global finance and telecom finance is not a large amount. So what it meant is we were talking with local commercial banks in Cameroon. And we were really an unknown entity in the network as a service space. We had no network as a service revenue, although we had a large installed base of equipment, and we were certainly unknown in Cameroon. So we had to educate the banks on the network as a service model, but they also had to get to know us. And the one thing we did learn, and it's been a really good learning, is that the commercial banks really don't want to do two things. One, they don't want to be the only one funding it, so they want us to be involved. And second, they don't want to come in first, okay? So they'd like to see us putting money and putting funds in, not just a commitment, but real money. So that's what we've been doing. And of that build cost in Cameroon, we've agreed with our banks that we'll put in 25%, or about $1 million Canadian, which is what we've been doing, by the way. And I think we've been reporting that and giving updates of how the build out is going. And those funds were helped partly by the funds we got through the private placement in July. Now, we've also had to give corporate guarantees, which have been supported by our bank in Canada, which we are now able to do. And so what that means is we've ticked several boxes. And we're running a process now with a few banks. We have one front runner, and we're hoping to close soon with them. That was referred to in the recent press release. And the bank we're talking to, we've been in discussion with for some time, so they know us well.
The DRC then. Why don't you comment on a larger financing, or how about this objective of getting to 10,000 sites? How do you plan on achieving financing for DRC, and then what's coming next?
Well, there's a couple other milestones that we had to achieve, and Cameroon has helped us do that. And one is to bring network as a service sites on air. And we're expecting to do that later this month. And that will be a major milestone, because the banks are telling us that that's what they want to see. That's what they want to see, that these contracts are real and that we're going to be generating cash. The second thing that they want to see is that we can do that profitably. And so the deal we signed with Spacecom, we're using Eutelsat in Cameroon as well. We've assured our pricing on the satellite connectivity. And the other variable cost in doing all of this is the site rental costs, both of which we've controlled. So we've got two major operational milestones. Now, when it comes to DRC, I mentioned Spacecom, and as we disclosed in the private placement, the funds that Spacecom committed, $4 million, have to be used solely for DRC. So when I talk about that equity commitment into Cameroon, in DRC, it's not $1 million, it's $4 million. So we've got 4 times as much. And the bank we're talking to in Cameroon also happens to be in DRC. So we're going to essentially take a cookie cutter approach and use the exact same loan scheme, even it is with a different bank. And we should be able to get enough to fund between the debt and equity commitment of about 180 sites. And if I'm very honest, DRC is really the prize, going to 2,000 sites, even taking it to 10,000 sites under contract, which is what we see more than enough demand for in Africa, and what we've said we'd like to do in the next 3 to 5 years. I mean, Cameroon is really a fairly small deal, and we could fund it fully with equity if we wanted, but for us, it's a proof case. And so we want to see some debt coming into that structure. So if we can show that we can deploy the NAS sites, operate them profitably, and also show that the orange contracts are bankable, then it gets us that much further with all the banks. There's a couple really important elements about the orange contracts. And I was doing the numbers the other day, and we've done these numbers a lot with the banks. First thing is a guaranteed minimum fee per site. Okay, so what that means is as soon as we have a site on air, which we're going to have at the end of this month, we start to collect and at a guaranteed minimum fee. So it doesn't depend on the traffic of the site or anything. We just agreed with Orange that we'll get a fee, and it equates to about $1,250 a month per site. So when we have 122 sites in Cameroon, which we hope to buy up by the end of the year, and you take 180 sites in DRC, which we've got funding for, that gets us to about generating about 400,000 per month. And that's per month, and that's a minimum, okay? That doesn't take into account the revenue share, okay? So we can increase with the revenue share to about 2,000 per month. So at 300 sites, that's 600,000 Canadian dollars every month. And we expect we're going to be there by the first quarter of next year. So having that revenue, having that operating experience, and having banks that know us, and we have the capital to go behind it, means that our debt financing is going to be that much easier. And the rate of payback on these sites, if you do the math, is about 12 months. So this is very attractive to banks. And having that type of payback, that type of security, helps to overcome some of the uncertainty they have with us and lack of experience we have in the market.
That sounds really exciting. Thank you for that answer. Jim, if you permit me here, I'm going to share my screen, and I'm going to show something to our shareholders that you've prepared, and it's a capital structure slide. So maybe you can walk us through this slide and explain to us what all this means exactly.
Okay, well, the plan of what we're doing, and by the way, I'll have to give credit to the person that pulled this together. It's a guy by the name of Chris Udding. Chris is a former financing lawyer. He's a former partner with White and Case. He ran the White and Case office for a number of years in South Africa, and he was actually in charge of the Africa desk for White and Case financing. So there's actually not much that Chris hasn't seen when it comes to financing telecom in Africa. And he's been working with me for a number of months. We actually worked together back in Telecel days. So,
well, we were hoping, I guess, to have him on with us today, but given that you're in London, he's in Vancouver, I'm in Montreal, and everybody's traveling to get to Toronto, I think it just became impossible.
It was just a bit tricky, yeah, but we'll hopefully get him on in the future. So, and he could probably do this a bit more justice than me, but I've got a pretty good idea how it works. So the first thing that you can see is we've got an entity there on the right, which is called Neuran Africa. And the idea is that we move all of the subsidiaries in Africa under that entity. And that could be based in Canada or elsewhere. We're just looking at incorporating it now. And what we want to do is make sure that that entity has access to the right mix of debt and equity capital. And what that entity brings is the equipment and skills to get network as a service up and running. It also provides all the support services to operate and maintain the network as a service. And that business is in essence what we're doing today. But it's just a subsidiary that gives access to Africa. What we want to do on the left is add Neuran Capital. And Neuran Capital is a dedicated customer finance vehicle. So we'll ensure through that entity that debt providers have first priority access to project cash flows and asset security to service the debt required to roll out these networks. And what we'll do is ring fence the rights of debt providers from all other liabilities of the group. So what it does is give a very pure financing vehicle, which is what a lot of debt providers, infrastructure investors and funds like to see, is they have a very clean vehicle without the risks and other operating issues that might come with Neuran Africa. So Neuran Africa will do project development and provide services to individual country projects. It will be able to source equipment from Neuran Capital. So in essence, what we're trying to do is establish a financing vehicle before we sign contracts. And the financing vehicle can have commitments much larger than what we have today. And like I say, to cover those 10,000 sites. So this will be a dedicated vehicle to carry out one or more of the above functions. And we can ensure even greater risk financing and mitigation for debt providers and equity providers.
Excellent. Thank you for that. We'll go back to the regular screen now. And just a couple more things before we conclude. So you've talked about debt and what worries shareholders in general is potential equity raises and further dilution, especially given the fact that we all believe that we're trading at a discount to where we really should be trading. So that scares people even more. So why don't you comment on that?
Well, you're right, and most of the discussion so far has been about debt, and there's been a purpose behind that. We as a team are convinced that the nature of our investments, being infrastructure, being networks, being backed by strong international mobile operators, are fundable by debt. Okay, it's less costly than equity, and it leaves, of course, more for the equity holders. I did mention, however, we do need to bring equity alongside that debt, and it will roughly be at the ratio we've followed in Cameroon. So if we get to 10,000 sites, we've done the calculations. When we start building and generating cash, we can start to fund from internal cash. But actually, to get to 10,000 sites, we probably have to raise about 150 million of debt over the time. And that's why we're thinking about this Neuran Capital in order to do that. But and so that means, equity of an order of 50 to 75 million. Now, the plan is not, in fact, to bring that at the headquarters level. The plan is to bring that at the Neuran Africa level. And we may do similar types of holdings for, say, if we go into Latin America or we go into the Asia Pacific region. So the idea is to take investment at these holding levels, which gives investors access to a portfolio of companies. And they're not tied to one company in particular or one country in particular, but they can diversify their risk. So we're doing the debt in Neuran Capital. We'll do equity in Neuran Africa. And in fact, there are some investors that don't invest in public companies. They don't invest in public stock. They want to invest in private solutions. So, the borrowing of that magnitude, I talked about commercial banks and local banks, to go to this level. I mean, by having DRC, which is about a 40 to 50 million build program, and to go to 10,000 sites, which is like, say, we have to bring in about 150 of debt, it opens up a whole new domain of lenders. And these are, international financial institutions, development financial institutions. And we haven't been, as much as we've been working on the Cameroon financing, we haven't stopped talking to people about this bigger picture. And we're actually in the middle of discussions with several. Okay, we've signed NDAs. We've got data rooms where we're sharing information on the projects and the projections. And what is likely to happen, well, I shouldn't say likely, it's very certain to happen, is it will be a syndicate of lenders. Because someone like the European Investment Bank, for example, could only take 50% of a deal. They might lead, and they might be the lead arranger, but they would, and do the due diligence, but they would be looking to others to come in alongside them. And so this is where you have some of the international financial institutions or sovereign type funds who will only take a minority. They wouldn't go as high as 50%. They might sit around the 20% level. So you start to bring these groups all together. They all know each other and they all work together. We've got 3 or 4 that we're talking to on the debt side. And also some of these development groups bring in equity themselves. And then let's not forget Spacecom, because Spacecom, very well capitalized satellite provider. And as part of our agreement with them, they had a right of first refusal to come in on either debt or equity financings. Okay, so we're talking about this type of this magnitude and this size of an offering, backed by M&O contracts, backed by some of the terms I talked about, and backed by a Neuran capital structure, which gives them security, cash flow, and a structure that limits and mitigates the risk. So all of this brought together, I think, you talk about our equity holders, and this is why I'm excited about working with the company, and it ties back into my comp scheme. I mean, I think, in my opinion, we're grossly undervalued currently. And when we build out contracts, which we're hoping to do, to have 10,000 sites, say, over the next 3 to 5 years, we'll be even more undervalued. So as we pursue this funding plan, leading with the debt we've got from the private placement, leading with the equity from the private placement, putting our own equity into the picture, bringing some debt alongside it, bringing sites live, bringing revenue in, showing cost containment and profitability, we can then leverage the value of this company. And I think we'll be looking at a price of the shares that's a multiple of where we're currently trading.
Okay, well, we've come full circle, but my assumption is what you mean by what you just said is that based on what we currently have, we're severely undervalued, and that we're getting obviously no blue sky type of bump either. So when you put those two together, as we continue to sign more contracts, it'll demonstrate that blue sky is for real, and hopefully at some point the valuation will catch up to where we think is a reasonable level. So thank you for that. Before we conclude, you're headed to Toronto tomorrow. I'm also headed there. Francis is going to be there. And then we're headed to Vancouver shortly after that. We're doing a COVID roadshow. No one's done a roadshow, in fact, in 2 years. And we were a bit reticent about it, but we decided now is the time to do it. And we've got a busy schedule. So I'm going to take this opportunity to invite our shareholders on Monday, the 13th. We're hosting a cocktail and a presentation. You don't get to drink if you don't get to listen. So you got to listen to the story, but whatever. But truly, it is really a more of a meet and greet with our shareholders. It's at Modus Restaurant on King Street in Toronto. And then on Wednesday, we're doing a similar event from 5 to 8 at Coast Restaurant on Alberni. Many people know that restaurant in the Vancouver area. So if you're interested in attending, capacity is limited. All COVID protocols will be followed in either city in terms of whatever the regulations are. And as a result, capacity is limited. So please either email myself, Jim, anyone that you have contact with in the company, info@NewRen, whichever means you can, and we'll try to include you in this event. So on behalf of Jim Bailey, thank you, Jim, for a comprehensive update on the financing. I think this is going to be much appreciated by our shareholders and myself, Frank Candido. Thank you once again. Until our next video. Have a great day. Thanks, Jim, and see you in Toronto.
Thanks, Frank. Yeah, see you soon.